The stock market, after bouncing a little bit yesterday, is starting to kind of come back down. We saw overnight yields popping close to my target of 4.6%. The dollar at one point was also pushing up, but has since reversed. And that's really the name of the game here. Right now, the markets care about yields and the dollar. Those strength matters. That strength is important to the market. Look at this. See the drop here? And then look at RSI right here. Okay? And then look at how we made a lower low here than over here when we were at these lows, but the RSI was higher. So that, again, lower move, higher RSI. Look at that. And what happens to price? It moves up. So there was a small positive divergence in the RSI, dictating a little move up. And then I gave you guys this level, and I said this is going to be resistance, and sure enough, it is. Now the question is, we're getting into this period where we're getting in this wedge pattern, right? Down-sloping orange line like this, flat-sloping bottom. Price, again, which way is it going to go? Now, the one thing we have to remember is that by mid-October, we should have news on spot ETFs. Now, the big thing, like I said yesterday, is if we get a spot ETF approved, which, by the way, I think it's 50-50. I actually do think it's 50-50. Price will pop, but again, for it to matter to me, price has to take out the 32,000 level.
In the world of crypto, all eyes are on the highly anticipated approval of a spot Bitcoin exchange-traded fund ETF in the United States. It's a big deal, and everyone's excited. But here's the twist. A potential government shutdown could slam the brakes on this approval. As the countdown to a possible government shutdown gets closer, just 4 days left as of recent updates, it's not just the government that could grind to a halt. The Securities and Exchange Commission, SEC, the folks responsible for giving the thumbs up to the Bitcoin ETF, might have to operate on a shoestring budget, delaying non-essential tasks like approving the ETF. Imagine the SEC, the gatekeeper for crypto legitimacy, struggling to keep its lights on during a shutdown. That's the scenario looming, especially if there aren't enough funds to keep the wheels turning. And here's the kicker. The next deadline for the Bitcoin ETF is mid-October. Will the SEC, facing a fiscal squeeze, see it as a top priority? The crypto world is hanging in suspense. Bitcoin investors are on edge as the US dollar flexes its muscles. The dollar strength index, DXY, hit its highest point in a decade recently, signaling growing confidence in the greenback compared to other currencies like the pound, euro, yen, and franc. But here's the twist. While some worry that this dollar dominance might spell trouble for Bitcoin and cryptocurrencies, it's not that simple. You see, the DXY just confirms something called a golden cross. It's a technical indicator suggesting a coming bull market for the dollar, but it's not necessarily bad news for Bitcoin. What's really interesting is that the dollar is showing this strength even in the face of economic worries like inflation and sluggish growth. Some experts predict the U.S. economy will grow by just 1.3% in 2024, down from the 2.4% average of the past 4 years. So why is the dollar looking so mighty? It's not all good news for the dollar, though. Investors seem to be ditching government bonds for cash, a sign they might be bracing for a recession or more inflation. It's all very intriguing. But what does it mean for Bitcoin? Well, if history is any indication, when the government starts printing more money, Bitcoin can shine as a hedge against inflation and economic uncertainty. State banks' plan to turn deposits into digital tokens raises questions. Will it impact Bitcoin and the US dollar? Some say it won't change much, while others wait to see how it unfolds. Let's continue our enlightening discussion with Gareth Soloway.
Now, look at this, folks. This is a target that I gave you guys just yesterday. We talked about this target price up here. Bear with me as I got some lines on the screen. Right there, that is your upside target, 4.6%. Look at how close we got. We are seeing yields beginning to reverse. Now, it's important to understand what's going on here, folks. You now have 700 banks with more real estate exposure on the commercial side that is recommended, meaning they are over-leveraged. The fact that rates continue to go up means these banks are going to get more and more stressed. In my opinion, you're going to see more bank failures. It's almost inevitable. So again, rates up here is, again, a good thing to control inflation, but there are things in the underworkings of the economy that are not built for rates to be this high anymore. And that's where you get breakages. That's where you get black swan events. So always remember that. It's not that rates shouldn't be up here. Honestly, they probably should. But again, when you have a system built on a house of cards, with a government that spends money left and right without any checks and balances, when the private sector has just continued to spend money as well, building up massive, massive debts, consumers, trillion-plus-dollar debts, mortgage rates, all of these things. This is where you get breaks, and why I continue. And I've said this, listen, since the markets were at their recent 52-week highs, I have come to you and I have said you have to be careful in this market. And it does not change here. If, in fact, with rates higher, you have to be even more careful. All right, so what I see on this chart here, I put in the RSI. This is RSI. I use it for divergences. I want to teach you a little bit about that today. So what I want to show you here is take a look at how you have a trend line right here, right? So a trend line also giving us resistance right around this level up here. And then look at the RSI. Basically, the RSI has flatlined. To me, that is telling me there's a divergence here in the RSI, and it is a negative divergence. In theory, the RSI should have the same upside move like this as yields are having. It does not. That, again, is telling me that you're getting ready for a pullback in yield. So, again, I don't use RSI, and I want to be clear on this. You know, RSI above 70 is considered overbought. Under 30 is oversold. That should mean nothing to you. I have seen charts that have stayed below 30 for months at a time and gone lower. It's the divergences that are a factor in your analysis. Okay, so very clearly, what are we talking about here on the chart of the 10-year? I expect the 10-year, maybe it touches 4.6% or not, but either way, it got within about 0.04%, and my expectation is a retrace down to this level here. So you're looking for it to come back to about 4.35%. Now, the question is, will that give the market a bid? Normally, I would say yes, but I wonder what is happening. I get the sense that under the underlying economy, things are starting to crumble. I wouldn't be surprised if we hear about bank failures over the next couple days, or maybe the Federal Reserve is going in already and kind of cushioning the blows here to help save them. How many banks are too big to fail? We don't know at this point, but I'm telling you right now, banks were not in a position to assume rates were going to go above 4.5% on the 10-year. And there are banks that are literally walking zombie banks out there. And that, again, whether the Fed and the government bail them out, I don't know. But I do know that, again, if not, you have trillions of dollars that literally can go into default. And listen, we're not even talking about the refinances. Some of these banks have literally in the next couple of years, $1.5 trillion they need to refinance at crazy higher rates than what they had right now. All right, so on to the next chart here. I want to get into the U.S. dollar. The U.S. dollar, again, folks, is probably the other most important thing in relation to the overall market conditions. And by the way, when I talk about market conditions, I'm talking about crypto, I'm talking about stocks, I'm talking about commodities, I'm talking about currencies. It all plays together. What we see and continue to see is that this is my channel that I've had for you guys on the U.S. dollar. Very clear, we have this area right here. We have this, and this, and we are hitting the upper band of it. Okay, so to me, I'm saying to you, and this is the weekly dollar chart, we have now had 2, 4, 6, 8, 10, 11 straight up weeks. Now think probability-wise. All right, when you've had 11 straight up weeks in anything, what is the probability you're going to get a 12th and a 13th and a 14th straight up week? And the answer is the probabilities start to diminish. If you look at past charts, here you had some green candles, 1, 2, 3, 4, 5, 6, and down, right? 1, 2, 3, down. 1, 2, 3, pause, 1, 2, and then down, right? So if you think about it, you have to say to yourself, okay, the dollar is hitting resistance. We have a very clear resistance point. And if I use my logical brain, not emotional, but logical brain, it starts to tell us that probabilities are favoring a pullback, plus we have resistance. Now, if we look at the RSI, does the RSI in this situation tell us anything? And the answer is not really. All right, not really. The only thing the RSI told us here is you had a short-term positive divergence on the RSI here, which told us we were going to have this bigger run. And what I mean by that is you had this point and this point, and you had this point and this point. So positive divergence, RSI was going up, and it told us there was another push-up coming in the U.S. dollar. The U.S. dollar did do that. Now it's in alignment right there with, again, price moving up. All right, so again, just something interesting to kind of take a note there. But overall, the RSI in this situation is not telling me anything. It's more so this weekly chart that to me tells me we're coming into resistance.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.